Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good morning. Ira Epstein of Linn & Associates with your morning flash update for this Friday, the 7th of July, 2017, just after 9:10 a.m. Central Daylight Time. So today's big number was the employment data. And what we should do is go right to it, and then we'll see what everything means. First off, they were looking for 175,000 jobs. They got 222. That isn't, to me, as important as this number, and I'll explain why. The hourly earnings only went up 0.15%, not even 2. They needed a number better than that. So that looks really solid. Now we'll go back to the charts. You get the big jobs data, you would think that gives the Fed the cover, employment running strong. Well, even with that big number, 50,000 more than the market was looking for, unemployment went up to 4.4% from 4.3%. That's not so much of a problem, and the reason I say that, you get people going in and out of the force. It's the lack of wage inflation that is the problem, and that lack of wage inflation is putting back the time frame for the Fed as to when the interest rate will come this year. That gave a boost to the stock market. So a big jobs number, you get a boost to the stock market. You normally think, well, that means the Fed's going to raise rates. No, it's the lack of wage inflation, and that's how the market's interpreting that. The dollar index up a bit because why? Well, the economy's still looking good on a relative basis. Forget the interest rate play there. It's looking good, so you get a little rally there, and a drop in a number of the currencies against the dollar. Not unexpected. Silver market all over the board. I question the low that we've got on here right now, and the reason I'm saying that, it appears there was a flash crash last night, and prices might have gotten down to the 1420, 1430 level, and then almost as fast as they broke, came back. It's unfortunate in the markets we continue to see those things, and they affect investors all over. I wish that the CFTC, the exchanges, somebody would figure out a way to prevent those things from happening, but they happen. In the energy sector today, this is bad. Gasoline down another nickel. This is bad. Crude oil down $1.31. So what's going here? The market looked at yesterday's EIA numbers, and the more the market dove into them, it kept saying, you know, this is partly the tropical storm data that we had, holiday driving. What do you do when that all goes away? And the market's rethinking that and doesn't like what it's seeing. Keep your eye on sugar. Could be a massive failure in the works today if the markets get under the 1350 level. In the grain markets, what's going on is the market's again looking at weather situations, and that's going to be the issue. And now the beans coming alive, the corn coming alive. Wheat's been in a corrective mode given the monster rally that it recently had, and that's probably all that's going on there. Nat gas getting a little bit of a boost off some hot weather that is forecast at this point. So now that we've talked about non-farms payroll, where all that went, and you can see what's going on. By the way, these are the May revisions that they did. They even gave the numbers a stronger boost in total jobs for May. People's Bank of China, their foreign reserves jumping again. So that's another issue we have to look at. Where are they going to put all that money? And that's the question that the markets have. After this G20 meeting, if President Trump and Xi don't really have a falling out, maybe we'll see some of that buying U.S. instruments. The Bank of Japan had to intervene today in their domestic markets for their 10-year bonds because they rose to 0.105%. That's not even a percentage point, 0.105, the highest since February, and they're determined to keep that at zero. So they intervened to keep it at zero. The Canadian government, the reason the Canadian dollar is strong today while other currencies down, their employment jumped dramatically by a net 45,300 jobs, better than the 10,000 they were looking for, and that drove their jobless rate down to 6.5%. So you got quite a bit of activity going on. Now let me talk to you about a study that we put together for you. This is a real popular tool. You know, a lot of clients like in and out trading. They want to have a number that they buy at, a number that they can get out at. Pivot points have been around a long time, and it's one of those tools that you can use. You can even add to this tool if you want relative strength or slow stochastics to get an idea what to do. And it's pretty simple. You get your numbers. If the markets fall down to the first buy, the blues, or the second one, you're a buyer. You're trying to come out either at the blue number above it or the white line. Flip it for the selling. We explain how the numbers are derived, and they're done universally pretty much the same way. By the way, this is extremely popular in currency trading, and they even go out a few more bands that I'm doing. How do you get the 2 videos that make this up? They're totally free to you. We want to show you how easy it is to learn with the different things that we teach, which we think sets us apart from other brokerage firms. You know, we're not about rates. We're not expensive, don't get me wrong. But I can't compete with the firms that are 25 cents, 50 cents. We're not trying to. We're trying to get you as a boutique trader that wants to say, you know, I want to talk to somebody. I want to be able to trade with them. I don't want to get ripped off in the commission either. That's where we're at, but we give you the trading tools. Call us. You can go to our website. You can also click up here if you're watching me on YouTube. And underneath us on many websites, it says, click here for Ira's free offers. Do so, and away you go. I'm Ira Epstein. Let us teach you how to work with PowerPoints and pivot points. I guess it's pivot points we use with the PowerPoint, and I will talk to you later. That's a tongue tie. Take care now.